Hello everyone and welcome back to another video of Financial Impulse. My name is Sudeep and in this video we are going to talk about the current stock market situation and also what we can do to utilize this time and get the maximum out of this bearish market. Okay, so we all know that Nifty has currently started a downtrend. It has already become weak and in the past few weeks it has dropped almost 5%. So that's a big drop. But the sad part is that it is not going to stop here. It is going to go down even further. Okay, it can drop to a total of 8% or 10% or 12% even. Okay, so in this situation I would strictly recommend do not make any new investment or take any new positions in stocks. Okay, so what can we do in this situation? So normally we get to hear a lot that when the equity market is going down, then the best investment is gold. Okay, so in this video we are going to take a deep dive into that concept and really see if it is actually true or not. And I am not going to just analyze the historical data and give you the result of my analysis of that theory. No, we are going to do the complete price action analysis and I will give you the at the end of this video I will give you the actionable steps which you can take and get the maximum out of the bearish market situation which is right now. Okay, so we'll do the complete price action analysis and compare Nifty with gold. Okay, so we'll compare and see if gold is a good investment right now and what the price action tells us. We are going to find out. Okay, so let me first of all take you to the Nifty's chart. Okay, so this is Nifty and this is the weekly time frame. And first of all, if I enable the moving averages, and this is 10 weeks and 30 weeks moving average, we can clearly see that there is going to be a cross below. Okay, the 10 weeks moving average definitely going to cross below the 30 weeks in either next week or the one after that, because it is clearly getting weaker and weaker after hitting this level. Okay, we can see the price dropped sharply. Okay, after hitting this level, then it did go up with a huge momentum, then again one big red candle here pulling the price down. Okay, and then we get to see some 2 weeks of weakness and then a drop even further, right? And currently it is here. So I expect the price after this crossover, I expect the price to definitely touch one more week. It might take one more week here and then start going downwards, and we do not know where it is going to stop. It might stop here at 17,850. So that will also be a big drop. Okay, or it could go down even further to this level 16,550. So, and when Nifty drops to this level, okay, definitely the stocks are not going to go up. Okay, it is definitely not going to go up. So that's why I would recommend not to take any new positions right now. But if you are already having some investment and you are at a good profit of 30 or 40%, then do not exit in panic. Okay, just watch the price action. If the price action is also showing bearish, and I mean in weekly time frame, then you either withdraw partially or the complete amount. It's up to you, because once Nifty gets weak and starts going downward, we do not know where it is going to stop and when it is going to start the uptrend again. So that's why it is better to keep cash reserve with you. Even if you have a lot of cash in reserve, still I would recommend to withdraw some of the amounts when you see the price action getting weak of the individual stocks that you own. Okay, that is the best thing to do in such scenarios. Okay, why do you want to hold a stock which you are already in at least 5% profit and you know that it will definitely go to minus 10 or 15% in the next few weeks? Why would you want to hold? Okay, you definitely want to buy altogether when the correction is already done. Okay, so that's why you can sell some of the units and withdraw the amount, right? So coming back to weekly and gold, weekly time frame of Nifty and gold. So Nifty currently is at 19,126. Okay, the market is still open and we can clearly see the weakness in the big time frames. Okay, red candles mostly, right, and very little green candles, almost negligible. So clear sign of weakness. And I will also enable the MACD. Okay, people who follow that, for them also it will be good. You can see that when moving average, convergence, divergence, MACD crossed over here and moving average crossed over here, we got to see a big uptrend. Okay, and now moving average has already crossed below here. Okay, and the moving average, okay, 10 and 30 days moving average are going to 30 weeks moving average are going to cross below in just 1 or 2 weeks, right? So clear sign of bearish market. Okay, so no point of making a new entry right now, because 80 to 90% of the stocks will fail to give a breakout even if they are in a breakout state. Okay, even if they have completed their basing pattern and they are going to give a breakout as per the price action, but still it might fail. Okay, because the overall market is bearish. Okay, and there is negative sentiments in the market. So in this scenario, it is better to stay after, just wait until the correction is over. Keep cash ready. Okay, so we are getting to see that the market has turned bearish for equity Nifty. Right now, let's take a look at gold. Okay, so that we can get to see if that theory is right or not. Let me just hide the MACD and hide the moving average as well. We'll see the price action. Okay, normal price action of gold in weekly. Okay, here it is, gold. And what do you see? It's a clear sign of uptrend in weekly time frame. Okay, you can see this price action like this. Okay, and clear sign of strong uptrend. Okay, and I can also draw one trend line here like this. Okay, I can draw a trend line like this. Okay, sorry. Yes, so we can clearly get to see that the trend line was broken here, and here it is facing little bit of resistance. And if I go to the lower time frames, let's say the daily time frame, okay, and we can clearly see that it is facing little bit of resistance here, but it definitely is a small resistance, and it will just go sideways little bit and then definitely break it. Okay, so I will go even to 4 hours time frame, okay, to get a clear view. And once I enable the 4 hours time frame and enable this, okay, the moving average, we can clearly see that the price of gold is taking support of this 30 period moving average, and definitely it is giving strong signs that it will break through this resistance level of 61360. Okay, it will definitely break through that. Okay, and let me just once again go back to weekly time frame, but before that I can clearly show you that how nicely it is giving a breakout here. Okay, a small, after a small correction, this crossover, okay, in 4 hour time frame, and giving you a swing trading opportunity. And let's measure how much this is. So people who are swing traders, you can use 4 hours and 1 hour time frame for trading, and use 10 and 30 period moving average as your crossover if you follow crossover trading, but do not ignore the support resistance level. That will not be a good idea. Okay, so we can see 7% return in 21 days. Okay, so gold giving that high percentage of return in just 21 days, 3 weeks. So that's a big move, obviously, and it is clearly telling the nature of gold that it is getting bullish and bullish. Okay, in higher time frames as well. Okay, so let me just go back to weekly time frame. Okay, let me clear the drawings. Yes, so in weekly time frame, we are clearly getting to see the 10 weeks moving average crossing above the 30 weeks moving average. And also at this point I will enable the MACD, and we can clearly get to see the initial phase of an uptrend. We are already getting to see a crossover. In Nifty we saw a cross below, Nifty getting weak. Okay, it has not yet crossed below, but Bank Nifty already has. Let me just show you that as well. People who trade Bank Nifty also needs to see. Okay, we are getting to see, let me hide the drawings so that it will be clear. Okay, Bank Nifty has already given a cross below. Okay, and obviously it is in downtrend. So another good recommendation is that do not enter any banking stocks right now. Okay, so completely stay away from equity at the moment. Okay, just focus on gold. Okay, that is the clear message of this video. Okay, once again I'm going to gold, and we are getting to see the clear picture of a initial phase of uptrend in gold, right? So it's a clear point that you should only stick to gold right now, but it is up to you whether you want to buy physical gold or sovereign gold bonds or ETFs. It is up to you, but I would recommend ETF is the best option, because if you are buying physical gold, it is hard to convert it into cash. Okay, because normally the gold exchanges will give gold in return. You can use that physical gold and buy gold ornaments and all, but you cannot convert it into cash easily. Okay, but in gold ETF you can do that very easily. So I really prefer gold ETF as the best source of investment in gold. So now considering investing in gold, what should you buy? So I would recommend some of the best gold ETFs here. This is Grow's list. I will share this link in the description section. You can buy any of these. Okay, all these are good ETF. Okay, and this Nippon India Gold ETF. This is called Gold Bees. This is the most famous one, but you can buy any of this. Okay, it doesn't make any difference, and it will also all these things will move also in a similar manner, not going to give much of difference, right? So coming to the key takeaway of this video is that stay away from equity, stay away from stocks. Do not make any new investment right now. Just focus on gold, buying gold and gold ETFs, to catch the big profit that gold is going to give in next few weeks or months, because gold is definitely in uptrend and we do not know how high it will go. We just have to mark our entry at the right time, which is right now. As I already showed, it is the initial phase of an uptrend for gold. So just invest in gold ETFs, and that is the best option for those who really prefer to stick to ETFs and not physical gold. And you can also buy physical gold, up to you, it is your personal choice, but do not miss out on ETFs. Okay, that will not be a wise move. Okay, so that's all for this video. I hope this video was helpful to you and you found something valuable, and you got the point clearly that when equity market is down most of the times, and in fact 70 to 80% of the time, gold is the best option to buy. But it is not always true. Let me just tell you that during COVID crash both of them fell together. Okay, so there are certain exceptions, but as of now the situation is same. So we are going to focus on the present, and that's all we need to do in stock market, right? So the key takeaway once again, invest in gold. That's it, right? So thank you for watching. I'll meet you in the next one. Bye. Take care.